TSM shaking a little bit of weight off, down 10, almost 11% from all-time high. Today we're going to see what it's worth and where it could be headed. So for Taiwan Semi, we have a price per share of $133, a price to earnings of 25.39, a market cap of 691 billion, and an enterprise value of 665 billion. There's a cash to debt ratio of 1.79, so for every dollar of debt, they have $1.79 to pay down those debts or expand the business. Looking at their margins, we can see versus the industry, all fairly strong. Versus history, there's a current gross margin of 53.57 and a median of 50.3. So just above that median for the last 10 years. Operating margins, same story, just above the median with 41.8 and a median of 39. For net margins, again, sitting between that median and maximum with 38.75 and a median of 35. And for free cash flow, big red flag, sitting with the lowest they've had in the last 10 years with 12.81 and a median of 22. So it looks like there's some problems with the free cash flow of the business. If you have any ideas why, leave them down in the comments. For net margins and their other margins, all pretty strong. Looking at the management, I use ROE, ROA, ROIC, and ROC. And again, these all look very strong versus the industry, but versus history, they're not the highest they've achieved. They're just about the median or even closer to that minimum. Management still doing fairly strong versus the industry, and business also performing well in the industry. Their price to earnings ratio has a median of 16.45 in the last 10 years and a current of 25 with a high of 33. So not cheaply valued. A lot of risks going on with Taiwan with geopolitical events. Looking at their financials, we can see that in 2014 they earned a revenue of 24 billion and a net income of 8 billion. So just about a 1 to 4 ratio of net income to revenue. And their most recent, they have revenues of 70 billion and net income of 27 billion. So increasing those margins, it looks like, even over the last 10 years, revenues only really increased by about 2.5. So the revenues are fairly slower growing, but the margins are also growing at the same time. So they're earning more from what they're selling. And on a trailing 12-month, it tells a little bit of a different story, showing net income decreasing and a dip in revenues, but maybe a recovery here. Cash to debt looks in pretty good pace. We can see pretty steady share float size with some slight sales there and then a slight buyback recently. We've got the bulk of their operating revenue by geographic region in the United States with 66%, 10.8% in China, 9.3% in Taiwan, 5.5% in Europe, the Middle East, and Africa, 5.3% in Japan, and 3.2% in others. So the bulk of their revenue is coming from the US, and it is those wafers. This might give us some insights into why the USA is trying to bring a plant to the United States soil so that we can have a little bit more of that homeland chip production. But to see what it could be worth and what the valuation looks like, let's run a DCF. Before we do that, if you do like these type of videos, make sure you subscribe to the channel. And if you haven't already, hit the like button. There's about 17% growth priced in for the next 10 years. And the last 10, they've achieved 15.9. In the last 5, they've averaged 23.8. And the last 3, they've averaged 18.9. So fairly realistic fair value, or close to the fair value for earnings per share growth. Generally, the 10 years is a little bit less likely to be achieved, I guess, because a lot's changed in the last 10 years. It's not the same as it was 5 years ago or 3 years ago even. It's new every day, really. So I don't necessarily want to weight the 10-year as much, but looking at 5 and 3, it's achieved higher than that 17. So I'm going to say maybe 18, 19%. A little bit more bearish than the 5-year estimate, but a little bit more bullish than the 3-year. So 19 to 20, I'm thinking we could see a fair value of 163, whereas we're at 133 now. And if you think they'll achieve closer to that 5-year, then we could see 200 or even 214. But for a bearish estimate, if you think they're going to do less than that 17 and maybe get closer to that 10-year average of 16 to 15, we could see a fair value of 125 or even 117. Looking at free cash flow, we can see higher amounts of growth priced into it. So it looks like for fair value to be what it is today, there's 33.4 priced in for the next 10 years. And in the last 10, they've achieved 13. In the last 5, 13. And the last 3, they've actually decelerated. Based on free cash flow, it does look overvalued. And based on earnings per share, it looks like it's right around fair or maybe even slightly cheap. Again, these are just valuation tools that I use. There's a lot of factors that go into evaluating a business and something I might want to buy or sell. And I put different weights on them depending on the specific circumstances of the business, because they're all individuals and they're not exactly alike in other. So ultimately, there's other factors that determine whether I'm going to be buying or selling. And there's also the fact that there can be a company that fits 9 out of 10 criteria in your trading system, but there's definitely also one out there that fits 10 out of 10. And if it increases your odds of success, then you don't have to pull the trigger at companies that are below your criteria. There's no called strikes in investment. So not calling TSM a called strike, it could be, I could have a position. It could be a called strike. I could choose not to buy. I could do all these things. But you ultimately in investment, you don't have to swing unless you really want to. So that's what I'm doing. I'm looking for the best stocks I can find. If you're new to the channel, our goal is to beat the S&P 500. So if you haven't, hit the subscribe button so you can follow us on that journey. Let me know down below what you think. Do you think TSM is cheap? Do you think the earnings per share proves it? Do you think the revenue is growing and the margins increasing is a good sign? What do you think of the risk involved with Taiwan and geopolitical tensions? But that being said, this is my take on TSM stock, and I'll see you next time.